I'm jacked. Jacked to the press!
Looks as good as on paper. We're in the kill zone, pal. We're locked and loaded.
Hi there guys, welcome back into another video. A little bit of a different one for you today. I want to offer you, especially if you're new to trading, what I believe to be the red pill of trading, okay? If you're unfamiliar with that analogy, go and watch the Matrix films, alright? But what we're going to do today is address something that I think is absolutely fundamental to understand, okay? Unfortunately, I believe that a lot of people don't, okay? So what we're going to do is we're going to use the best data in the crypto market, which is the TRDR console, and we're actually going to watch a little bit of an educational video together. All right, so let's just jump into the console and I'll tell you what we're going to do today and how we're going to solve this problem. So back in the TRDR console, our favorite data provider, but what we're actually going to do today is watch a bit of a video by a trading legend called Mark Douglas. Mark Douglas was producing educational material for the markets well back into the 1980s, I believe, but it was in about 2000 he released a book called Trading in the Zone. Okay, at that same time, he actually did a few seminars as well called Trading Psychology. Really, really good. And I remember watching these seminars and reading the book back in the day. I still had a full-time job at the time, back in 2016-17, but I was trading European indices, FTSE, German DAX were favourites at that time. And I remember watching these seminars and reading the book, and it really, really, really opened my eyes, okay, to what was going on in the market and how price actually moves. And this is the point I want to get to, that I think a lot of people don't understand, okay, and especially if they're new. So I just want to help everybody out, and I want us to all watch this video together, 10 to 11 minute video together. And what I'm going to do is we're going to watch it, and then I might pause it in places and we'll have a little chat about, you know, recent price action maybe, okay? But I want everybody, and I hope this video helps everybody, I want everybody who's new to this market or not to fundamentally understand how price moves. How does price move? Because I can tell you right now, it's not from your triangle patterns, it's not from your wave patterns. You know, I always have this thing of saying, how is a wave formed? Okay, how is a bull flag formed? How is a triangle formed? You know, if you trade in these patterns and everything, they're all brilliant, and I would never slag classic TA off in any shape or form. I'm a fan of it also. I absolutely love it. I always have those areas in mind. I always watch those zones. But you've got to have order flow, okay? You've got to watch order flow and understand how the price is moving in those areas, okay? And why those patterns are formed. Those patterns are formed because of bid and ask, okay? So we're going to jump into this Absolute Legends video now, and we're going to watch it together. 10 to 11 minute clip, okay? Reason I'm making this video is I could drop links on all the socials and say to you, go read this book, okay? The seminar is actually 4 hours long. I will drop links to it, and I do recommend you go watch the full thing. If you're new, please just take the time and go watch the full thing. Just put it on. You don't, you know, it's a YouTube clip, but just put it on. You don't particularly need to be watching it. You know, just put it on in your headphones if you're, or, you know, just play it in your car play or whatever, or if you're on the train, just go and listen to it. And, you know, any little nuggets you pick up from it, more the better. You know, I sometimes read a book and think if I get a 1% nugget out of this book, then great, you know. So what we're going to do is watch this small clip that I feel to be fundamental to understanding the markets, okay? Let's jump into that now. Right, so here we are, guys. As I say, this is seminar 3 of 4, okay? It's pretty low quality. I mean, I think this was between 2000 and 2005. It doesn't even seem that long ago to me personally, but yeah, it was a while ago, so this will seem really old. And this is one of the best quality ones I could find. Obviously, people who've uploaded at a time, they're going to struggle anyway, depending on what it was recorded on. But yeah, I'll drop a link for this guy. So let's jump in and let's watch what Mark has to say on price action and how price actually moves, and then I'll pause at points and we'll have a look at the charts together if relevant. All right, guys.
Is that I think what I said when we just before the break is that when you guys understand the nature of price movement and how any technical methodology that's based on a mathematical formula or a price pattern interacts with that movement, when you understand that relationship, how you need to think will become self-evident. Do you remember me saying that? Okay, this is the part that we're going into right now, okay? In other words, where you understand just exactly how prices move. Because what I found in doing these workshops over the years is that here I'm addressing a group of people who trade and who in many cases have traded for years. And if you ask somebody exactly how do prices get from one price to the next, they can't tell you.
And that's key. I mean, that he's talking about experienced people as well, you know?
They don't know. They don't know how it happens. And maybe you guys are, I'm sure you guys aren't that group, but we'll go over it just as a refresher, okay? We'll do it as a kind of refresher. So, oh. No, actually, I haven't addressed a group yet that there were very few people, or if anybody could.
God, it does look old though, doesn't it? I mean, this, to some of you younger guys, this will look so old, but to me, this looks like, it's like 1970s or something, it feels like, but it was only 2000s. Oh, God.
Exactly how prices move from one price level to the next. So for an example, okay, if the last reported price that you see on your screen of something is 10, how does it get to 11?
Now, forget the numbers. This is relevant to everything. Imagine Bitcoin's at 55k, 56k, you know? It's relevant to absolutely everything. Forget that he's just numbered it 6 to 13 there, yeah?
They asked 12.
What?
They asked 12.
Who's they?
Market maker.
The market maker asked 12, okay? Well, no. Well, okay, it's at 10. How does it get to 11? How does the price actually move to 11? More buyers. Well, more buyers, but that's true. But then again, when you what's that? Demand, okay. But when you look at 10, what you have is you have offers at 11 and you have bids at 9, right? Everybody understands that? Okay, now, there's only 2 ways that anybody can make money in this business. There's only 2 possible ways, no matter what strategies you're employing, no matter how elaborate they are, no matter how simple they are. You have to be able to buy something at a low price and sell it back at a higher price, or sell something at a high price and buy it back at a lower price. Are we in agreement on that? And would you also agree that everyone that trades is trading to make money? In other words, I'm going to say that there isn't anybody who puts on a trade that does so knowingly and consciously thinking it's going to be a loser. In other words, where they go into the market and say, my purpose is to lose money. Okay, you guys with me on this? Now, if the only way that you can make money is to buy low and sell high, or sell high and buy low, and the last price, posted price, is 10, which represents the value at that moment, then what's low? 9 is low. And what's high? 11. What's the only way that it can get to 11? Somebody thinks 11 is a good price, meaning that they have to buy high relative to the last price, right? So for an example, so basically what this also means is that all the offers have to be taken out at 10, do they not? Anybody who had an offer in at 10 that wanted to sell at 10 will get filled, and all those offers have to be taken out for the price to go to 11. Correct? And of course, and for the price to go to 12, all the offers that exist at 11 have to be taken out so that someone could actually bid the price up to 12. For prices to move, somebody literally has to bid the market up.
This is key, to be honest, and this is what we always talk about, and you'll hear me going on about this when we look at the charts on the live or in some of the videos. Okay, so we obviously try and get in at best price, don't we? As always, okay, so we always try and get in at best price where the demand is, yeah? Okay, so we're trading with dynamic traders with the demand, okay? And you'll often hear me say, okay, we're in here. You're good with your execution. We've got in here. Price is moving up. Great. We can manage our risk very easily here now. But what do we always say if you're part of this community and part of this console is, I need to see traders bidding this up. You'll often hear me say that, you know. I need to see traders now bidding this up. I'm in here. They need to now see this as a good price still. Okay, they're getting in at a worse price than me down here, but they need to bid this up for continuation. For continuation, I need to take the offers out and I need the bidders to start chasing up. I need the ratios to come in. I need those limit offers in and I need them to chase it up because I'm in here and I want them to get a worse price than me and bid it up. Let's go back.
Prices to go lower, it means that someone has to offer it lower. Now, if the only way that anyone can make money is to buy low and sell high and buy low, why in the world would anybody bid the market past the last posted price?
Because he thinks he got a winner.
Conviction, exactly. Conviction. In other words, what you have is a situation where on every trade that exists, there are two people on both sides of the trade, even in stocks. There's even someone who's selling a stock, not like a commodity where in a futures contract or an options contract, there's two people on both sides of the trade. There's a buyer and there's a seller, and the next tick is going to make one of them a winner and one of them a loser, right off the bat. If you and I enter into a trade at 10, okay? We enter into a trade at 10. It means that you, in essence, if you're the seller, let's say you sold them at 10 and I bought them at 10. The next tick is going to make one of us a winner and one of us a loser. If the next tick is 9, the amount of money that flows into your account is coming directly out of mine. Are you guys with me on this? The next tick is 11. The amount of money flowing into my account is coming directly out of your account.
And just to highlight once again, he's talking in ticks. I think he's a little bit of a legend in the Forex market, is Mark Douglas. But this is fundamental to all markets. Forget that he's talking about 9, 10, 11. Forget the fact that he's talking about ticks. He's basically talking about price action, yeah?
Okay? So basically what you have is you have two diametrically opposing beliefs entering into every single trade. Every trade that is made, there are diametrically opposing beliefs about what the future is going to be. So again, I'm going to say, what would cause anybody to buy high or sell low? Just conviction. In other words, what you have is a situation where if someone's willing to bid a market up to the next highest price, basically what that person is doing is that person is stepping out, saying that my conviction that the price is going to go to 12 or beyond is so great that I am willing to do the opposite of what I need to do to make money. Think about what I just said. I am willing to do the opposite of what I need to do to make money because my conviction is so strong that the next price will be 12 or 13. Otherwise, this person would wait. If this person thought the next price was going to be 9, then they'd buy lower. If they thought it was going to be 8, they'd buy low. They'd wait and buy lower.
And that's what we talk about when we say, I want to see that bid now come in. We've executed at the lows. I want to see that bid come in. So I want to see conviction from other traders bidding it up. And we're talking about the long side at the minute, obviously, because we're in a little bit of a trending market. But same for the downside, you know, if you're short on the market, you then want to see the offers chasing price down. Conviction from traders to say, shit, I'm not getting in at the lows, I've missed it, or I'm not getting in at the highs on that short position. I now need to be dynamic and getting a little bit higher. And we hope they're beyond, or at a worse price than when we've entered.
Whereas, so what happens is that the person who's willing to bid a market up and take out these offers at 10, take out all the offers at 10 and bid it up to 11, has to have a stronger conviction in the future than the person who sold it to him at 11. Because this person is creating price movement, is actually creating movement, and the person on the other side of the trade is being passive because they're doing exactly what they think they need to do, and that's sell high relative to the last price. Are you guys with me on this? Okay, everybody understand it? Now, I want to ask you, is there anybody in this room who has purposefully bid up a market? There are? There are some people who've actually bid a market up? In other words,
No, Mark, I don't have the volume to do that, sir.
people who've actually taken the offers, all the offers out at the next highest price and bid it up? Do people like that exist?
Yes.
So in other words, we are aware of the fact that there are traders who both have the financial and the psychological resources to actually purposefully bid markets up or offer them lower. We're together on this, right? Okay. So basically what you have is that all price movement has to be a result of an imbalance in the degree of conviction between the traders who believe that prices are going up and those who believe that it's going down. That is the only way that prices move. It doesn't matter what the reasons are that people tell you about why they did what they did. Or it doesn't matter what the reasons that you hear on CNBC or whatever about where the market is and why it went the way that it went. Ultimately, it all boils down to an imbalance in conviction. That's the only way prices can move.
Just to highlight, price isn't moving because someone's drawn a spider's web on a chart.
The only way they can move is for someone to actually purposefully bid it up or offer it lower. And for them to do it, there has to be,
Or because the moon is in full moon in a solstice and the hippies are all dancing.
like a sense of strength in terms of energy in their belief that the next tick is going to make them a winner.
Just to quickly highlight on this point as well that I often tell a lot of guys is when you are watching order flow, one thing to note is, and this might sound obvious again, but I just want to point it out quickly, is the only way price actually moves on a day-to-day market is from market orders in and out, okay, so buying or selling. We can watch the resting limit orders, okay, so our top levels in TRDR and that bid come in and we want to see it follow up, we want to see the bid follow up price, or if we're short, we want to see the offers follow price down. But price will only move off those resting limit orders once they are filled or not with a certain amount of volume. Maybe they haven't got much volume on them and price gets run through, but on a fundamental price action day-to-day basis, price will only move from those or get pushed around by those market orders coming in and out.
Okay, so we basically, does everybody understand? Everyone's with me on this. All price movement is a result of an imbalance in conviction between the buyers and the sellers. Every trade that's made, there's somebody on both sides of the trade that have diametrically opposing beliefs. You're always having, with every single trade, there's always a clash. There's always a clash in wills and a clash in belief in terms of what the next tick is going to be or what the future holds. We've got two people entering into, in a sense, an agreement by making a trade, but both of those people have diametrically opposing expectations of the future. And one of them is willing to say, hey, you know what? My expectation is so great, is so strong, that I am actually willing to do the opposite of what I need to do to make money and bid a market up. Now, there are traders who will do that. I call them dynamic traders. They are the people that have, like I said, both the financial and the psychological resources to actually bid markets up.
You'll often hear us talk about that as well in the socials or on the live or any of the videos. Dynamic market bidding coming in, pushing it up again. And again, we're talking about bid up because we're in a trending market right at this moment. But same to the offside, if you're short, you want to see those dynamic levels come in and push price down. Okay, those are the dynamic traders, the people with the conviction that can push price.
But the typical, and what I'm going to call everyone else, passive technical traders.
Me and you.
Okay, they've got dynamic traders and passive technical traders. What the typical passive technical trader doesn't really, I'd say, really not aware of or think about is the fact that the only way that they will find themselves in a winning trade is by the actions of the people who are willing to bid a market up and offer it lower. That's the only way that it happens.
As passive traders, we get in and execute at best price using the data provided to us. Okay. We then need to look for those dynamic traders to come in and bid price up or offer price down.
In other words, when you and I get into a trade, I am a passive technical trader, by the way. I'm not one of these dynamic guys. I don't bid markets up and offer them lower. Okay? That when you and I get into a trade at this price right here, let's say we bought at 7, we're buyers at 7. What are we really saying when we get into that trade? Bottom line, what are we saying? Based on the dynamics of what I just explained. We're saying that I think that someone is going to come into the market after me and buy at a worse price than what I did.
And that is just what we're talking about here. And obviously, currently, what date is it? What date is it? 3rd of May, okay? Bitcoin's just come down to these 56k lows that we looked at this week, okay? And this is exactly what we want to look for. So we review the data down here and we get in at best price. And we are now, as passive traders, okay? I don't have the volume to then come in dynamically and start pushing this up. I wish I did. You know, my name's not Kirby or Sailor or CZ. He's in jail. He might have a good connection in there. You never know. And be trading the markets. I'm sure he's onto meme coins by now. But we don't have that volume generally to then push this up. So as passive traders, we execute with the data provided in the console. And we are now looking for them dynamic traders to come in. You know, right now, offers are moving up. Great. That's what we want to see. We want to see offers move up. Okay. So these guys here, they're losing a bit of conviction to that offer side. And we want to see the dynamic traders come in with a little bit more bid and push this further from our entry. They're buying at a worse price than us, and we hope that they push it on, okay?
That has such a strong conviction that this market is going to go up, that person is actually willing to buy at a worse price than me, to buy at 8, to buy at 9, to buy at 10. Because if there isn't anybody else that comes into the market to take out all the offers at 8, take all the offers at 9, take out all the offers at 10, that market ain't going up. And I'm not going to be in a winning trade. You see, the implications are every single trade that we put on as passive technical traders, we are in fact obliged and dependent on other people who are willing to do something at a worse price than what we did it at.
Yeah, key point.
Or we won't be a winner. Are you guys following me on this?
Yes, Mark.
Is it starting to put the idea of trading into a different context? That in essence, what you're really trading is other people's perception of what is high and what is low? That any technical indicator, any price pattern that you might trade, any trade that you put on, you are basically trading other people's perceptions of what is high and what is low. Now, when you think about how well you might know other people's perceptions, you think about it in that context, it might not make a lot of sense to get so fixated on staying in a trade that isn't working.
Another key point as well, you know, if you don't see that dynamic follow through bid or ask, pushing price away from your entry, you then need to review that trade, don't you? Really, you need to review it. You know, okay, there's no follow through bid here. You know, again, we kind of mentioned that in the socials a lot. You need to see that follow through. If I'm not seeing that follow through, why am I in the trade? Okay, am I sure I'm buying demand? Am I sure I'm buying demand? And then what I'm going to do is, and again, you'll hear me say this, I'm just going to let price come back and prove me wrong in this area. You know, I know my risk. My risk is a certain percentage, and I'm going to let price prove me wrong, which I'm often in favor of, to be honest, okay? Or if there's really, really nothing, and then the offer side starts getting dynamic and really hammering price back down, do you want to stay in the trade? You know, that's down to the individual trader, obviously, but yeah.
It might be a little easier to put in a stop and to say, hey, you know what? If people aren't coming in to buy at a higher price than me, I'm going to give them this much room from here to here, and if they don't come in, I'm out of this trade. I'll just go to the next one.
Yeah, yeah.
Because that's basically what you're doing as a trader. You are completely dependent on other traders to make you a winner.
Unless your name's Kirby or CZ.
Now, who are these dynamic traders? Who are the people that are going to do this and why? What? Hedge funds, okay? Money managers. In the commodities arena, do you guys really know how like the futures markets even started in the first place? Or
all right, look, we're going to stop it there because he goes into a little bit of historical detail on futures and the like. But yeah, just wanted us to go through that because I thought it was mega important. So let's just jump back into the console for a second and we'll just go over a couple of points. Right, guys, so I hope in watching that together, I've offered you, if you've not seen that before, a little bit of what I consider to be a Matrix red pill moment back in the day when I watched that years ago, and it was actually really enjoyable just to watch it again there with you guys. I think Mark's a really good speaker and a good writer as well, so grab his book. I'll drop a link for that below as well. So how do we solve this problem now that we know how price action moves in the market? Well, we solve the problem by grabbing as much good data as we can. On this channel, we're obviously a fan of the TRDR console. Best data out there, I do believe, and cheap data as well. So grab a link from below for a free trial. Jump in the socials along with us and yeah, get involved, get comfortable with the platform, and I'm sure it will ease your mind in your trading system and give you more of an edge in your execution as well. All right, guys, but yeah, just wanted to bring this video to everyone's attention, new or old really, but mainly for the newer guys out there who don't have an understanding of the fundamentals of price action. And yeah, there's a couple of quotes from Mark that you get from the books, and it's when you understand certain things like this, it really does make you a little bit more chilled in the market, because no one has a clue where price is going, apart from some of these bigger guys that can push the market around. No one has a clue. So it's, it's great, we all still going to use the patterns we see, the classic TA we all use, we all still love it, and it's a great way to learn. But once you fundamentally know the way price moves and how it needs to continue to move, you're gonna want this decent order flow data. All right, so grab a link from below, and yeah, just give us a few comments, and please, if there's anybody new that you know or that will benefit from this video and has not seen the likes of Mark Douglas before, give it a share, and also just give us a comment as well. What are your thoughts on this? When have you read the book before? Have you seen the videos? And just give me your thoughts. And yeah, I'll just leave you with a couple of quotes that I do like from Mark, and it really gives you a nice chilled meditative sentiment on the market. And he basically says, when I put a trade on, all I expect is that something will happen. Okay, we're in down here, something's going to happen. We don't know what, but we look at the data, as we go, and we look at the order flow to see what's going to, am I going to get follow through on this? Okay, if not, what do I need to do? Do I need to risk off a little bit? Another one, the hard, cold reality of trading is that every trade has an uncertain outcome. Okay, I love that one. The reason I love that one is basically, we'll get in at best price, but I don't know if it's going to go lower. I'm just reading the data and I'm executing a trade. It's just a trade. Call it that. It's just a trade. I'm executing at what I think's best price. It hasn't. It still has an uncertain outcome. Where does price go from here? I don't know, but I'm going to execute with the data I am seeing at best price. Once you once you realize that every trade has an uncertain outcome, I could be wrong. That's absolutely fine. I'll move on to the next one. You will be a lot more chilled in the market. Okay. We all look at levels. We all look at 56k and then think, oh, well, what about 54? What about 55? It doesn't matter. It doesn't matter. We could still go down there, or we could go up to 80k today. Something's going to happen. We don't know the outcome. We are passive traders. All we can do is watch the data, watch the order flow, execute as best as possible, manage our risk, and go from there. All right, guys, look, I hope this video was beneficial. Please give it a share to anyone new in the markets, and we'll see you on the next one. Cheers, guys.
It's a wazzy, it's a woozy, it's a fairy dust.